What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Palantir stock, ticker symbol PLTR, on a variety of time frames in anticipation of the next trading day, Thursday, May 2nd. Alright guys, Palantir stock here today up 15 cents per share. That's plus 0.68% in regular trading hours. Of course, today was FOMC day. No change in interest rates. We did get some confirmation out of Powell that it's an unlikely move for the Fed to hike from here. That initially kind of triggered a bit of a pump. However, I think the market quickly realized that we kind of already knew that already. That's really not anything newsworthy, I would say. The only difference today was that we verbally got more confidence out of not hiking out of Powell today than we had ever had. However, with the Fed, we have to read between the lines always, and that has been very clear between the lines for, I would say, months now. So this was kind of a market-wide pump and then fade. Nothing Palantir specific there, but let's take a look at the stock itself, and we'll start by doing a quick little volume profile analysis. We'll then look at the psychological levels that I think we all need to be paying attention to here tomorrow. And then we'll finish out with the expected move and the directional bias coming out of the chain. So let's start with that volume profile analysis here on the 5-minute chart, guys. Really all we're doing here is taking a peek under the hood to see, okay, we have the move. That's said and done. Does the volume support the move, or does it actually go against what we saw in the price action? It's another layer. It's more depth of understanding. Listen, by the way, if you guys are new here, Palantir is a daily upload, so I appreciate you subscribing to the channel, and I'll keep the Palantir videos coming. So let's take a look here at the volume profile. Very contextual open. We get that higher volume open and then a fade, right? We saw a little bit of higher volume pops mixed in. However, it's such a mixed bag, and these single outlying candles that are out of context and high volume, there's too much of a risk of fooled by randomness. That's why I'm always looking for consecutive bars that are out of context on higher volume. So this area here, I consider kind of a wash. Now, as we headed into the end of the day, remember that we got news, okay, at 1 p.m. Central. It's 2 p.m. Eastern time. So that's going to trigger more volume. Okay, we initially got that green pop, and then the stock itself kind of slowed, right? Retraced a little bit, and volume quickly faded along with that. Now, what's interesting about this, guys, is that when looking at the volume profile, we cannot look at it literally because we expect, right, high volume off the open and then a fade. And then we expect a taper upside into the close in terms of volume. So what I'm really looking for is like, okay, is this bullish volume more out of context than this bearish volume into the close compared to what we typically expect, which kind of looks like this. If you look at the mouse, like this is kind of what we typically expect. Which one's more out of context, right? But the truth is, we got news today that drove this upside move, so that adds a catalyst to this region, and then there's kind of the back-end catalyst of the market coming to the realization that this really isn't a whole lot of new information here today. So when you take all that and kind of throw it in the pot, at least in my opinion, I really don't see much bias here. Which leaves us to look at the move. At the end of it, guys, the move itself was a net positive move. We ended up a little bit higher than where we began prior to that news release. So net positive move, but really neutral bias, no bias at all, really. So let's move on now to the 30-minute chart. Let's take a look at those self-fulfilling prophecy psychological levels that traders, funds, institutions, I think everybody kind of is paying attention to here. That's why my charts are always so simple. You have the 50 period and the 200 period, and that's it. Because I want what has the most eyeballs for that psychological effect. Now, you guys remember yesterday we were talking about how on the 30-minute we were pulling in right to the 200, right? And we kind of closed right above there, giving it up in the after hours. After hours always needs to be taken with a grain of salt. However, today in the intraday session, that 50 period got sucked downside. So we ended up reclaiming actually both of those as these kind of matched up here, coincidentally here late in the day. We ripped up through and then came down for the retest and basically closed right on top of both of those levels there. Okay, right there. That's a close call. Now listen, we are pulling away a bit in the after hours. As always, volume's low though, so take that with a grain of salt. So what I'm really looking for here tomorrow, bulls. Ideally, any downside test of whichever moving average happens to be above the other. At the time of the test, I want to see the higher moving average ideally hold as support. The 50 could get sucked up again, okay, and become the higher moving average yet again. If the 200 is higher at the time of test, I want to hold the 2. If the 50 is higher, I want to hold the 50. Hold the higher one as support and kind of return to a double ascending. The 50 is ascending, the 200 is ascending, and the stock is ascending with the 50 on top, right on top of the 200 with the stock above both, and pulling in to test the 50 periodically, holding it as support. That is really like the ideal scenario as far as the moving averages are concerned across time frames. Now, if you're a bear here on Palantir, really what you guys want to see is ideally a downside break back through both of these and have that similar setup, however mirrored to the downside, where you have the 200 descending, the 50 descending, and the stock below both of them using the 50 as descending resistance. That's your primary goal. Now, if we move on to the 4-hour chart, zoom in here. Some interesting movement. We actually, we back tested the 50 period here on the 4-hour this morning, and we bounced away. We held it. That's a good thing to see. Okay, so we now currently find ourselves, we're approximately 3.1% to the downside here in the after hours from that 50 period, right? So if we see a back test of that, of course, bulls, I don't care what volume it tests on as long as we bounce away higher from that level, confirming it as support yet again, like we saw this morning, bouncing on higher volume. Whereas bears, again, any downside test, you want to see that break on high volume, low volume retest, high volume rejection for confirmation. All right, and bulls, ultimately here on the 4-hour, the near-term goal to the upside is really to reclaim that 200 period, though currently we are looking at, approximately a 4% upside move to get to there, so just keep that in mind. Now, on the daily, guys, the daily is going to be the most important. The daily has the most eyeballs. Okay, now we have earnings coming up. However, earnings are not until Monday here on this name. But you'll see here that we are currently in between that $21.30 to $23 a share channel, and we got near to testing 23 here today. The high of that candle was 22.83 here today. Now remember, this is the daily chart, so it's not going to show after hours movement. That is okay. All right, now tomorrow, bulls. On the daily chart, again, this one has the most eyeballs. Listen, here in the after hours, we're currently at 22.37. So, bulls, we currently find ourselves now, here, actually, let's go from the after hours price. Right around 22.37. Up to that $23 area, it's 2.79%. Okay. The ideal situation here is a reclaim of 23. Claim 23 as support. However, right ahead of 23 at about 23.30, 23.35 is going to be that 50-day moving average that everybody's watching. That's a very, very common thing to have on the daily chart, and the daily chart has a ton of eyeballs. So a reclaim of 23 bulls, right, not really in a little bit bigger picture, but still short term, not really out of the woods because that 50-day is then staring you in the face. All right, so the best case scenario is to get up above both 23 and the 50-day. Just be aware of that. Bears, any test of 23, you want to see that reject, and your ultimate goal is to break downside through 21.30, claiming that as resistance, getting outside of this channel, just picking your direction. Okay, 21.30, of course, bulls, if we see a test of that, you want to see that hold as support. Now, implied volatility, if we compare that to the last couple months here, you can see it's in the higher region. Just be aware, if you're looking to purchase options right now, you are paying up for that slightly inflated premium from the elevated implied volatility value. And if you're holding contracts, especially if you bought when IV was lower, right, you've experienced some IV pump. So just be aware of what you're holding. Now, let's take a look at the expected move here. The next expiration is going to be Friday, May 3rd at the close. The expected move by Friday's close compared to today's closing price, not after hours, the closing price, is plus or minus 79 cents a share. Okay, so we have 2 trading days until then. All right, so what we can do is we can divide that by 2 because we don't have an earnings on Thursday or Friday. All right, so we can realistically expect similar volatilities being priced in by the market on either day there. But we're not quite done yet, right? We have to add back about 50% is what I'm adding back currently, which gives us plus or minus about 59 cents per share of expected move being priced in by the options traders. That's quite literally the 1 standard deviation expected move by tomorrow's close compared to today's close. But by design, there's no directional bias baked into there. That's the volatility expectation. So what can we do? We can pull out some directional bias from the market by looking at the options volume, okay? Just under 200,000 contracts traded today. 146,000 of those were calls. 53,000 were puts, so a heavy call side bias on the overall call put ratio. But if we break that down by short-term speculators alone, that 0 to 20 delta range, we're seeing 37,600 calls and 15,400 puts. So not only are we seeing a heavy bullish bias on the overall ratio, we're also seeing it a little bit lower volume, okay, but we're also seeing that out of the short-term speculators here today. Hey, listen, guys, if you're getting value out of these daily Palantir uploads, I ask you to do one thing. It takes half a second, and it's free. Leave a like on the video, and then go enjoy your day. I appreciate it, and I'll see you in the next one.